Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me today is Vivek Iyer. And so far, there's no definite pattern that we are looking at when we talk about the benchmarks for sure. So the Bank Nifty is the one which is supporting some of the gains that we've been seeing. It's led by the PSU Banking Index, which is up around 1.5%. We do have a lot of sectoral movers as well. For instance, the CPSA index is doing very well. That index is up 1%. The pharma space, that has made a comeback 0.4% higher. And it's the small cap index which is outperforming the mid caps as well today. So that index is up around 0.4%, while the mid caps, that one is surging around 83 points. We've come off from the highs. The low today was around 24,360, so around 40 points higher from there. But yes, it has continued to be in the red for the larger part of the day so far. So we'll see which way things go. For now, we have source-based news coming in, which indicates that SEBI chairperson Madhabi Puribhuj will not be attending the PAC meeting today. Remember, it was indicated that the meeting could happen today itself at around 11 a.m. But now there is an exemption that's seeking to appear before the committee due to some personal reasons. So this is a developing story. We'll keep getting you more updates on that. But for now, for the markets, very sector-specific moves.
Very sector-specific. Good morning, Sonal. Some important updates on the screen. So we'll wait and watch as to what exactly is the outcome and what are the further steps that come about from this particular development. Sonal, what I've done is, I've actually taken out and picked out a few stocks that are moving around quite a lot in the session today. First up, there was a large deal that was announced overnight along with Sona BLW results, and we're looking at two stocks here. The first one is Sona and the second one is Escorts. Now remember, Sona is doing very well in the session, good set of results. Along with that, this particular acquisition, JP Morgan's Stale, has been done at a very attractive valuation. So when you're talking about Sona BLW, attractive FY24 EV to EBIT of 8.9 times is what they've paid for this particular asset. And Escort sale price, implies a valuation of close to 1.7 times FY24 EV to revenue, while Escorts itself is trailing at 4.4 times trailing 12 months EV to revenue. So that particular valuation discount, is indicating and kind of explains the kind of opposite views that you're seeing as far as number one, Sona is concerned, and number two, Escorts is concerned. Sona up almost 10%. The second one, of course, is Syngene. Some positive commentary coming in while the management has kept its FY25 guidance intact. They're also saying they're witnessing early signs of recovery as far as discovery services is concerned. And also the company is doing significant number of pilot projects with large and mid-sized biopharma clients looking to alternatives to China. Some positive commentary coming in from Syngene, stock higher by 7%. And lastly, if you're looking at the life insurance pack, very mixed views post results. SBI Life, they've gone ahead and trimmed down the VNB and APE guidance slightly lower for FY25. Stock is seeing quite a bit of a sell-off. Max Financial, on the other hand, ICICI Prudential, both of them are actually building on to the gains. But let's kickstart Trading Hour with the corporate conversation. Fino Payments Bank is in focus after it reported its Q2 FY25 numbers. The company saw its profit after tax decline 13% sequentially, while total income and EBITDA surged. To discuss this and more, we have Rishi Gupta, the MD and CEO of Fino Payments Bank, joining us now. Good morning, Rishi. Thank you so much for joining us. First up, give us a sense of how exactly Q2 panned out, and very importantly, when can we expect the transition to an SFB?
So good morning to you and your viewers. Actually, Q2 has been a phenomenal quarter for us, the best ever and the highest on the revenue as well as PBT. So we grew at about 27% in quarter two with revenue of 455.4 crores. Our PBT actually grew by 33% to 25.9 crores. Actually, what is happening is that this is the first quarter we are paying taxes after all our accumulated losses have been cleared. So post-tax, it is 21.1 crores of profit, which is about 8 to 9% of growth. So that is where somewhere the commentary around profit, we have to see from a PBT point of view and not from a post-tax point of view, because this being the first quarter after tax, that's where that's why sequentially the number has come down. Otherwise, the number has grown by about 5 to 6%. And that's where we are. Our PBT margin also grew to 5.7% from 5.4%. Our throughput actually grew by 24% in this quarter, of which digital contributes to 44%. So the biggest thing to remember to you and to your viewers is that we have to compare the PBT numbers more than the PAT, because this being the first quarter after tax, that's why the PAT numbers have come down. But overall level, the company has grown at 27% and at PBT level at 33%.
Okay, we do get that point, Mr. Gupta. So tell us, just to follow up on what my colleague asked earlier, the transition to SFB, by when can the investors expect that? And while you spoke about the PBT number and the revenue as well, which has grown 27% of the total income, you'd guided for an overall growth of around 20 to 25% this year. Will you be able to exceed that in that case?
So first on the growth part, so our guidance, we upped that guidance from 20 to 25% this year. We expect that in this quarter, we did 27%. We expect we should be at least at 25%, maybe even more. On the SFB part, we had applied to RBI in December 23. We are in process in that with RBI on that. And we hopefully very soon or whenever the process with RBI is over, we should hear on that.
Mr. Gupta, talking about that particular transition, could you give us a sense of the timeline as to when exactly you could expect that particular nod from RBI to come through? And also, do you have plans in place? Do you have the management bandwidth to go ahead and transition completely to an SFB? That is something that the street wants to hear.
So two things on the process part, our application is already there. We are waiting for inputs and some news and some queries from RBI on that. So once that is done, RBI will take it to the internal committee and then we'll hear from them. Our view is that post RBI in principle approval, within 12 months, we should be able to go live. But we can't give a date when the in principle approval come. Having said that, from our internal point of view, and this I said earlier also, from our internal point of view, we are revamping our complete technology and digital stack. So that should be up and running in the next 6 months. On our people, we have started to build up a small credit vertical within Fino, which is right now working with other NBFCs to build up a credit business for us. And we are quite positive because we don't need new capital post the approval to start our SFB. And subsequently, as the growth will happen, we look at the fresh capital at that point of time. But from a team point of view, we are very much in place or getting in place, I would say, over the period.
Okay, Mr. Gupta, while overall throughput has been strong, there has been pressure when it comes to a particular segment, which is micro ATM, AEPS and remittance business. What happened here? Because there's been a decline on a YOY and on a quarter-on-quarter basis in the throughput. So what is the outlook going forward on this segment?
You are right on that. See, the transaction business has degrown in the last 1 year or so, largely also because the ecosystem is moving from cash to UPI and digital. So we were largely a physical company. Now 17% of our revenue comes from digital. So to that extent, we are also migrating from that business. But the general customer behavior is changing from cash to UPI. Also, a lot of our customers which used to come to our platform to do APS or micro ATM or DMT for other banks now are our own customers. Fino has now 1.26 crore customers, which are largely people who used to come to us for this kind of services. If you look at our CASA now contributes to 23% of our overall revenue, and it has grown by 41% in the last 1 year. And similarly, if I look at CMS, that has also grown by nearly about 24-25% in the last 1 year. And digital business, which was has grown by nearly 2.5x in the last 1.5 years.
You spoke about two important metrics. First one was CASA account growth. What was it in Q2 on the 1 year basis? You gave us the number, and also CMS. What was the growth there, both for FY25 CASA as well as CMS? What is the kind of trend you're expecting?
So on the CASA side, we have substantially grown, if I would say, in the last 1 year or so. Sequentially, if I look at, I think I don't have the numbers right now, but would be in the range of about 10 to 15% or around that level, if I see from the last quarter to this quarter.
Okay. Mr. Gupta, quickly, if you can tell us, okay, all right, we have to we will just get to you in a bit, Mr. Gupta. We do have visuals. The visuals are coming in. That is the NVIDIA CEO. It does not definitely get bigger than this. So we'll cut across to that fireside chat. We'll have Mr. Mukesh Ambani on the stage very soon as well. the chairperson. He'll be there in a bit, of course, but of course you have to tune into CNBC TV18 for more updates and that fireside chat as well. So it's coming up on CNBC TV18, AI's pivotal role in shaping industries. A lot more lined up. It's going to be a very, very interesting chat because we have been talking about the big AI push, the big move in the NVIDIA stock as well, and that will be coming up on CNBC TV18 as well. Mr. Gupta, getting back to you before we cut across to that conversation, I wanted to understand what has happened this quarter that you have stopped giving the debit card spends details. What were they like in this quarter?
Actually, we can share the debit card details. It has roughly gone up by about 2 to 3% vis-a-vis the last year. But more importantly, what is happening is that the trend is moving from debit cards to UPI. So if I add both debit card spends as well as the UPI P2M spends, which is largely for merchant payments, there is a growth of 62% vis-a-vis the last year. So you have to see both the numbers add together, both debit card as well as UPI, because the customer behavior has changed from using debit cards or has reduced from debit cards to more on the UPI side. That's why overall number from a UPI P2M purpose makes more sense, and that is the number we have given in our presentation.
Mr. Gupta, so combine both of this together, what will be the sustained run rate as far as the spends are concerned?
So we have grown in about 62% in the last 1 year if we add both debit cards and UPI. We expect that it should be in the region of about 40 to 50% as we move forward because the base has also gone up, but the UPI growth is substantially good.
Okay. All right. Thank you, Mr. Gupta, for joining in today. It was a pleasure speaking with you. It's time to cut across to the conversation. This is Jensen Huang, who is the CEO of NVIDIA, just addressing the audience.
There are two fundamental shifts that are happening at the same time. This hasn't happened since 1964, the year after my birth. It wasn't because of my birth, but in 1964, the IBM System 360 introduced the world to the concept of IT, the IT industry as we know it, introduced the idea of general purpose computing. They described a central processing unit, a CPU, I/O subsystems, multitasking, the separation of hardware and application software through a layer called the operating system. IBM described family compatibility for applications so that you could benefit by the install base of your hardware to run your software over a long period of time. They described architectural benefit across generations so that the investment that you make in software, the investments you make in using the software is not squandered every single time you buy new hardware. They recognized in 1964 the importance of install base, the importance of software investment, the importance of building computers that run the software. Architecture discipline, all described in 1964. I've just described today's computer industry. The same industry that the India IT industry was built from. General purpose computing as we know it has existed for 60 years until now. For the last 30 years, we've had the benefit of Moore's Law. An incredible phenomenon. Without changing the software, the hardware can continue to improve in an architecturally compatible way. And the benefits of that software doubles every year. As a result of doubling in performance every year, depending on what your applications, you're reducing your cost by a factor of 2 every single year. The most incredible depreciating force of any technology the world's ever known. By depreciation, cost reduction, it made it possible for society to use more and more of IT. As we continue to consume IT, as we continue to process more data, Moore's Law made it possible for us to continue to drive down cost, democratizing computing as we know it today. Those two events, the invention of the System 360, Moore's Law with Windows PC, drove what unquestionably one of the most important industries in the world. Every single industry has subsequently been built on top of it, IT. But we know now that the scaling of CPUs has reached its limit. We can't continue to ride that curve, that free ride. The free ride of Moore's Law has ended. We have to now do something different, or depreciation will end. And we now will not enjoy depreciation, but experience inflation, computing inflation. And that's exactly what's happening around the world. We no longer can afford to do nothing in software and expect that our computing experience will continue to improve, that costs will continue to decrease, and continue to spread the benefits of IT and to benefit from solving greater and greater challenges. We started our company to accelerate software. Our vision was there are applications that would benefit from acceleration if we augmented general purpose computing. We take the workload that is very compute intensive and we offload it and we accelerate it using a model we call CUDA, a programming model that we invented called CUDA that made it possible for us to accelerate applications tremendously. That acceleration benefit has the same qualities as Moore's Law. For applications that were impossible or impractical to perform using general purpose computing, we have the benefits of accelerated computing to realize that capability. For example, computer graphics. Real-time computer graphics was made possible because of NVIDIA coming into the world and make possible this new processor we call GPUs. The GPU was really the first accelerated computing architecture running CUDA, running computer graphics, a perfect example. We democratized computer graphics as we know it. 3D graphics is now literally everywhere. It could be used as a medium for almost any application. But we felt that long-term, accelerated computing could be far, far more impactful. And so over the last 30 years, we've been on a journey to accelerate one domain of application after another. The reason why this has taken so long is simply because of this. There is no such magical processor that can accelerate everything in the world. Because if you could do that, you would just call it a CPU. You need to reinvent the computing stack from the algorithms to the architecture underneath and connect it to applications on top. In one domain after another domain, computer graphics is the beginning, but we've taken this architecture, CUDA architecture, from one industry after another industry after another industry. Today, we accelerate so many important industries. cuLitho is fundamental to semiconductor manufacturing, computational lithography, simulation, computer-aided engineering, even 5G radios that we've recently announced partnerships with, that we can accelerate the 5G software stack, quantum computing, so that we can invent the future of computing with classical quantum hybrid computing. Parabricks, our gene sequencing software stack. QVS, one of the most important things every single company is working on, is going from databases to knowledge bases so that we can create AI databases. Using QVS, we can create and vectorize all of your data. QDF, data frames. Data frames is essentially another word for structured data. SQL acceleration is possible with QDF. In each one of these different libraries, we're able to accelerate the application 20, 30, 50 times. Of course, it takes a rewrite of software, which is the reason why it's taken so long. In each one of these domains, we've had to work with the industry, work with our ecosystem, software developers and customers, in order to accelerate those applications for their domains. cuOpt, one of my favorites, combinatorial computing application, a very compute-intensive application, for example, the travel salesperson problem. every supply chain, every driver-rider combination, those applications could be accelerated with cuOpt, incredible speed up. Modulus, teaching an AI the laws of physics, not just to be able to predict the next word, but to be able to predict the next moment in time of fluid dynamics and particle physics and so on and so forth. And of course, one of the most famous application libraries we've ever created, called cuDNN, made it possible to democratize artificial intelligence as we know it. These acceleration libraries now cover so many different domains that it appears that accelerated computing is used everywhere. But that's simply because we've applied this architecture, one domain after another domain, that we've covered just about every single industry. Now, accelerated computing, or CUDA, has reached the tipping point. Several years ago, about a decade ago, something very important happened. And most of you have seen the same thing. AlexNet made a gigantic leap in the performance of computer vision. Computer vision is a very important field of artificial intelligence. AlexNet surprised the world with how much of a leap that it was able to produce. We had the benefit of taking a step back and asking ourselves, what are we witnessing? Why is AlexNet so effective? How far can it scale? What else can we do with this approach called deep learning? And if we were to find ways to apply...
Okay, all right. We'll cut back into it, but for now, we'll slip into a short break. But do not go anywhere. It'll be coming up next, and it does not get bigger than this. Coming up next is a fireside chat between Jensen Huang of NVIDIA and Mukesh Ambani of Reliance Industries. You have to stay tuned in for this conversation.
Welcome back. Let's now shift our focus to the commodity space. Manisha joins in today, and today we are focusing on crude oil.
Thank you for that, Vivek. Well, yes, last week wasn't so great. We saw the crude oil prices decline by nearly 7%. But this week, the last couple of trading sessions actually have been on the positive side, and we stand with nearly 2 to 3% of gains, as it were. So $75, $76 a barrel for the Brent crude prices is really back. So when you look at from the lows of this year as well, we are up by nearly $8 to $9. But when you look at the highs of this year, which was $91, we are nowhere near those kind of levels. That is because you're looking at the dollar index trading at around 10-week highs. The treasury yields overnight also have risen, and that seemed to be putting pressure on the dollar-denominated commodities here. Well, apart from that, it also is the U.S. inventory data that came in yesterday evening. While the markets were anticipating an increase of around 1 million barrels, we have seen 5.5 million barrels of an increase in U.S. The U.S. production also continues to be near record highs. That is what we've seen in the last couple of weeks. That is also weighing onto the markets. The only one thing that has been supportive prices is, one, there still are fears of escalation of war in Middle East. One. Second is that the street is readying itself for another interest rate cut from the US in the month of November. And third most important is the 5th of November. That is when you have the US presidential elections coming in. And depending on who comes in and which way the policies go, especially when it comes to oil and shale gas within US, could really impact these markets. So clearly not too much of shorts being created. There's some buying that we've seen ahead of all those events coming into the market.
Okay, so many events impacting the moves in the crude oil market. Thank you so much, Manisha, for joining in as always and giving us a sense of what's happening there. We'll do one thing, we'll slip into a short break. When we come back, we'll discuss market technicals with Vishal Malkan from malkansview.com and also discuss the top trading bets. Welcome back. Well, the mid-cap index has slipped into the red. The benchmarks steady where they were just a while back as well. So let's get a technical check on the markets. So Vishal Malkan from malkansview.com is joining in for just that. Vishal, good morning. Thank you so much for joining in. Well, what are the trends suggesting now? We have not got a specific move from the market so far this day. It's been volatile. What are the important levels to watch out for on the Nifty?
I think good morning. I think we are into a correction mode, which we started in the month of October, start of the month. And Nifty is not yet formed a bottom. And if you go back into history, which is exactly in this dates, when last year, 2023, Nifty made a bottom around 26th of October, which is also an important time cycle, an important what we call as an anniversary date in stock market, because that's when most of the crashes have ended in the history. So we are looking for some bottom formation in the next few days where we can look at bottom fishing. Although the good sign about the market is the bank Nifty, which is outperforming Nifty, and it's making higher bottoms. And today also it is performing better. So that shows that very soon we'll have a bottom in place and we look for good sectors to invest into.
Vishal, what are your top picks for the day? What is it that you're recommending?
So I'm going with one of the stock which is forming double bottom and getting a breakout on the lower time frame chart is called ICICI Pru with a stop of 745 for targets of 780 and 790 in the next few trading sessions. And the second one would be a metal sector, which is VEDL, where again it is forming a bottom at around 460 levels. So stop loss of 458 for targets of 475 and 495 in the next few trading sessions.
Okay, so that's stock specific. Vishal, you said some of the sectors that will contribute to the uptick that we'll see on the Nifty from here. Any specific sectors you would like to name?
So as of now, the sectors which we are tracking right now is two of them is pharma sector and IT sector, where we can see that least damage have happened in the last few days when the correction was happening. That means it is outperforming the market, and that's when again when market resumes its uptrend, those are the sectors to watch out for.
Thanks so much for that, Vishal. Now moving on, let's now slip into a short break. More on markets and stock-specific updates on the other side. Welcome back to Trading Hour. Well, Deepak Jasani from HDFC Securities joins us now to discuss market fundamentals and the top sectoral picks. Thank you so much for joining us, Deepak. First up, earnings season seems to be starting off on a bit of a dampening foot. What are you making of earnings at the current point of time, and which are top sectoral plays from the current levels?
Good morning. Thank you for having me. Now, the Q2 earnings so far have proved to be a little muted than expected. Anyway, the expectations were quite low, but this time around the results have been even worse than expectation. The main issue, I think, is around the demand. Demand has remained muted across the board, and that is leading to realizations being under pressure. Apart from this, I think there are disruptions in select sectors. Regional competition is picking up. Down trading is happening. Regulatory and judicial interferences are also creating a lot of heartburn among the corporates. D2C brands are now easily available due to the spread of online trading or online e-commerce. And that is giving some sort of a competition, especially in the metro and the urban areas, to the established FMCG brands. So broadly, I think the results are not justifying the valuations which we had a couple of days back. And that is why we are seeing some sort of a sell-off from the foreigners. And this especially at a time when the China has announced a series of stimulus measures. So the Chinese economy, the Chinese market is now proving to be more attractive than India at the given point of time.
Okay, so you think there'll be more correction which is on cards in the Indian markets before there is a good entry point?
So from the lows of October 23, we have seen dip buying emerging every now and then. So we have seen markets falling by 5% or almost 3 to 4 times, and then markets correcting upwards, and a correction of over 9% around the election time. And again, markets recouping the entire losses. So this time around, we are lower by about 6 to 7% from the recent highs. And going by the past trends, I think it is fair to assume that one more attempt of dip buying may happen, maybe a couple of percentage down from here.
Now, whether that upward momentum will breach the near-term highs, that we will have to see. Going by the confluence of the negative factors, it looks a bit difficult at this point of time.
Deepak, which sectors do you think can help markets go ahead and rebound from the current depressed levels?
I think despite the neutral or muted results, I think banks and BFSI, the entire BFSI sector continues to look attractive to us relatively among the other sectors. Apart from that, IT seems to be a tactical buy. New age businesses, depending on what kind of businesses you are comfortable with, maybe one or two picks out of there. Auto ancillaries, mining, or some other stay sectors which look good from the near-term perspective.
Okay. There's a lot happening in the commodity space as well, Deepak. We are seeing new highs coming in from gold, silver. Commodities in general have done well. Do you like any of these commodity plays in the stock markets?
Commodities you will be able to play either through gold jewelry companies or through metal companies, I suppose. There is no third way to play the commodities. So gold jewelry companies, the jewelry companies have done quite well over the last few months. The valuations have expanded quite well. They are most of them are sitting on a lot of inventory gains. However, looking at the high gold prices, I think the offtake of jewelry this time around could be a little subdued as compared to the past. So there, I think looking at the high valuations, one could sort of wait for some sort of a correction happening there. If one is bullish on gold, then I think the better way to participate would be buying SGBs, sovereign gold bonds, or even physical gold for that matter. On the other hand, metal stocks showed some upward momentum when the Chinese stimulus measures were announced. Within the metal space, I think we are more comfortable with the non-ferrous side rather than the ferrous side. But we'll have to see and we'll have to observe as to how the Chinese stimulus measures play out and whether it leads to an kind of demand bump up for building infrastructure or for supporting the real estate out there, which could lead to better times for metal companies out here.
Thank you so much for joining us, Deepak, and giving us your views. Moving on, Public Accounts Committee of Parliament adjourns an important meeting relating to the performance review of SEBI. Parikshit is here with more details.
Well, yes, today SEBI Chief Madhavi Puri Butch was supposed to appear before the Public Accounts Committee at 11 a.m. this morning. The subject was performance review of regulatory bodies. Now, this was a contentious meeting because the opposition did want to ask questions about the Hindenburg report, and the BJP was objecting to that, saying that they will even complain to the Lok Sabha Speaker. Having said that, today K.C. Venugopal, the General Secretary of the Congress Party, someone who is also the chairperson of the PAC, said that she had requested for exemption from personal appearance at an earlier date, which she had been denied. Today, this morning, the PAC chairperson received a letter at 9:30 a.m. from Madhavi Puri Butch saying that she will not be able to travel from Mumbai to Delhi due to certain personal exigencies. Now, the opposition members and members of the PAC have said that considering the fact that she is a woman and she has expressed her inability to come due to personal reasons, she has been given that benefit, but she will now be called at a fresh date in the coming months. We hear that there was some amount of drama that happened in the committee room. The committee chairperson and the opposition leaders walked out after the meeting was adjourned, but the BJP leaders continue to sit in the meeting room. Opposition members later said that the BJP is devising a plan to save Madhavi Puri Butch as well, something that the BJP has condemned later on. So clearly this could have been a stormy meeting which has been adjourned for the moment. Let's see what happens in the coming weeks.
Okay, all right, Pariksha, thank you so much for joining in with all those details. So that's an important story, and we'll keep getting you updates on that one as well. It's been an ongoing event. It's been an ongoing story that we've been tracking for you very closely, and we'll get Pariksha back up whenever there is more update. But let's hear out the PAC chairman K.C. Venugopal on the same.
We decided to have a summatory subject for review of our regulatory bodies. That is why we called today morning the regulatory bodies of SEBI for review of SEBI. We send the notice, the committee branch send the notice to the concerned people. They, first of all, they sought an exemption, SEBI chairperson sought an exemption from appearing in the committee, which we denied. After that, she confirmed her and her team will be present on this committee. Other members of the SEBI that because of the personal exigency, she is not in a position to travel to Delhi. Today morning 9:30, she informed that she is not in a position to travel to Delhi. But being considering a woman's request, we thought that it is better to postpone today's meeting for another day. This is what happened.
All right, on that note, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific actions. Stay tuned for that. Welcome back. Before we talk about markets, it's a reminder for our viewers. Shortly, we will be getting the fireside chat between Jensen Huang of NVIDIA and Mukesh Ambani of Reliance Industries. This is a chat you do not want to miss. Okay, now it's a lot about markets as well. HUL, the earnings for the second quarter were a slight miss versus street estimates. Net profit dipped nearly 4%. Manglam is here with the details. The stock is down 7%. Manglam?
Well, HUL is the top nifty loser in today's trading session, and that's largely on account of three factors. The first one was the results were slightly shy of expectations. Any way you cut it, the revenues are slightly shy of street expectations at 15,500 crores, volumes coming in at 3% versus expectations of 4 to 5%, and that trickled all the way down to the EBITDA and the net profit as well. Even if you look at the segments, while there was notable outperformance from home care and beauty and wellness, personal care actually deteriorated by 5% in terms of revenues, and food and refreshments declined by about 2% as well on account of macro weakness in the tea business. The second reason that the stock is under pressure is because of an explicit call out in terms of urban weakness coming in from the management. They have said that even as there is gradual recovery in rural, urban growth has seen some moderation, and this, remember, accounts for nearly 2/3 of their revenue itself. There is raw material inflation which is going to inch up, and as a result of which they expect low single-digit price growth. Could that have an impact on the volumes or not is something that the street is still divided on. Important to look at the EBITDA margins as well. At current levels, the management believes that they will sustain going forward. And the third big reason, brokerages, not very perturbed by some of the positive statements that have come in itself, and they are actually cutting their EPS estimate. So JP Morgan has cut their EPS estimate by about 3% on the back of marginal moderation in revenue forecast. So they've cut their target price to 28.70 as well. Morgan Stanley has an underweight call on the stock, and Jefferies too has a buy call, but they have a target price of 31.30 on the stock.
Thank you so much for that, Mangalam. Well, time now for a short break. We'll get you more on the markets on the other side.
Welcome back. Well, let's talk about Navin Fluorine. That stock is surging in trade. It was not a bad set. In fact, in a challenging environment, the company saw 10% revenue growth on a YY basis. The EBITDA was up 10% as well. Margins flat, but the profits were down 3%. That is because of a tax increase in the quarter gone by. The specialty chemicals business continued to be under pressure, down 15%, but the HPP revenue increased by 23%. We have the CDMO revenue, which was up 41% as well. And the company indicated that Q3 and Q4 is seeing strong order visibility based on firm orders, and this is something that they're seeing for FY26 as well. Brokerages, while they have cut estimates across the board, but they are bullish on the outlook going forward. Citi says pickup in CDMO business and expected commissioning of new R32 plant in February 25 will augur well for the company. And Jefferies says that the commencement of 2 new contracts in CDMO in the fourth quarter of FY25 should jumpstart growth. So good numbers, and that's why we're seeing that uptick on the stock versus SRF. The numbers have been good.
Well, absolutely right. SRF, I believe, withdrew its guidance, but Navin Fluorine, on the other hand, seems to have given a very strong guidance, and no wonder then the stock is doing quite well. But with that, it's all the time we have on this edition of Trading Hour. Stay tuned. Halftime report is up next.